The Intel stock reminds me of a local sports team that at one time they were champions. They were back to back champions. They were a glorious organization that just knew how to win. But for a long time, that franchise has just been at the bottom of the rankings, just a consistent loser. And each year they get the hopes up of the fans, but then just disappoint again. And that's certainly how I felt with the latest earnings call from Intel. They really stunk it up. And it was really terrible in a lot of ways. The stock is down 44% in the last 30 days. And how is Intel going to move forward from here? I'd like to take a look at Intel and see where I value the company, understand what they're trying to do with their company, and see if I'm a believer or a non believer. I'm a stockholder, unfortunately, in this stock. It's probably been the biggest percentage loser for me this year. I'll take a look at my investment, share that with you, let you know how much I've lost to this point. Also, let you know what I plan to do with this stock. I know it's kind of an ugly mess, but I got to look at it because it's one of my investments. Now, Intel at one time was the powerhouse semiconductor company. They really fueled the PC market that started in the 80s and just kept going for about 20 years. They still control a majority of market share for PC sales or client computing, as they would call it. They've made their way to the data center, and a lot of their servers are in data centers across the world. Now, their future is being bet on their ability to build and operate foundries onshore in the US. It's an ambitious strategy, and if it works, it could really put Intel in a great position. Local shoring, local sourcing of semiconductors is a really good idea. As we've seen over the last 12 months, the US government puts restrictions on companies like NVIDIA and the ability for NVIDIA to export some of those prized chips that many companies want. The US does not want US companies to export that type of technology. The other reality is that Taiwan and China have an entangled relationship. China likes to think that Taiwan is a part of their country and Taiwan wants to be independent. Should there be some type of geopolitical tension there where China takes over Taiwan, could it disrupt the flow of semiconductors coming out of Taiwan? It most certainly can. And that type of risk exists for Taiwanese semiconductor and all the companies that source their semiconductors through TSM. So, overall, the strategy that Intel is trying to complete, I think, is a really good idea. It's just been an ugly, tough road to get there. I'd like to do an update on where they are with the foundries, when they expect to be operational, what the likelihood of success is going to be in that area. So let's start off with the fundamentals of Intel. Intel currently has a market cap of $82 billion dollars. And keep in mind, this company was safely above 200 billion dollars in market cap 10 years ago. It was a big company in the industry. Now it's just a fraction of what it used to be. The revenue is fairly high at $55 billion dollars, and their net income is positive, even though they've had a lot of trouble. Their earnings per share is 23 cents for the current year. Their PE is very high because of that low earnings per share. Forward PE is expected to be around 51. They are not going to have a dividend starting in the fourth quarter. Analysts believe that it is a hold, but it's highly discounted. And again, if their foundry business works, I think this stock will come back to a higher level. Over the last 5 years, you've seen the stock go from its peaks in the $60 per share range down below 20. So it's lost 2/3 of its market cap overall. The revenue has held together given that it's dropped so much. The current trailing 12 months actually shows the company growing just a tiny bit. So not everything is completely wrong with the company. The balance sheet surprisingly was fairly strong. They've got a lot of cash. They do have some debt, but they probably have 2/3 the cash level that they do debt. So that wasn't too bad. Their cash flow is going to take a little bit of an imagination because they are producing a lot of negative cash recently to build up those data foundries. But in the past, they were just a high free cash flow generator. So I'm going to take my best guess at what I think the free cash flows ought to be for a company like this and go with that because that's probably closer than using their historic data, especially the data for the last 3 years. The forecast for the business is for them to turn a profit if you remove non-GAAP items, or I should say remove GAAP items. And the earnings per share for 24 is going to be $1.10. Not too bad. And it's going to grow substantially in 25, 26. And their foundries are the first one supposed to become operational in 25, and then the second one in 26. So I think that's what's really cranking up the earnings per share, is those foundries are going to come online. Intel announced their earnings, and it was poorly received by the market. The stock just tanked. A lot of it was that they announced a big layoff and they took away the dividend. Really bad news. The revenue wasn't too bad. It was down 1% year over year. And overall, they did have disappointing sales, especially if you look at the data center and everything around AI. Intel is not a player in that business. And that's really the hottest part of the semiconductor industry. So they are being really left out of what has been one of the most positive trends, maybe in the history of semiconductors. So it's unfortunate for this company that other businesses like NVIDIA, Broadcom, TSM are thriving and leaving these guys behind. Intel is predominantly in client computing, meaning the computers that we're using, laptops, desktops, and so forth. They are in the data center and they want to get into the AI business. They do some networking and edge products as well, but that's a majority of their business. And they have their foundry. Now, their foundry operations are going to get much larger, which is really exciting because then they are going to control their own destiny. A lot of semiconductor companies are referred to as fabless semiconductor companies. What that means is they don't control their own foundry. Companies like Broadcom, AMD, and that is somewhat risky because they are dependent on primarily TSM, Taiwan Semiconductor. Should that supplier have trouble, then these other companies are going to have trouble, the fabless semiconductor companies. Now, they are more flexible and they can usually operate a little quicker on getting designs out, but they are not vertically integrated, and that becomes a liability at times. It can become a strength for Intel, but they really have to put their business together well and begin to really execute well. In the earnings release, they provided an update on the foundry business, which is really good. But the good news is that they're expecting the foundry in Arizona to begin producing semiconductors in the first half of 2025, at least at partial capacity. They also have another foundry being built in Ohio, and I believe that's going to begin to produce semiconductors in 2026. That's really good. That's around the corner. We're less than 5 months away from 2025. So if they can begin to produce some semiconductors out of those foundries, that'll really be good news and really good for its revenue and good for its profit. The other thing it'll do is it'll lessen the need for capital expense. Right now, Intel is spending a lot on capital expense. It's really drying up free cash flow. When they're done with these foundries, they don't have to spend as much capital, and that free cash flow will resume, and they can come back to those days of making $20 billion of free cash flow and being valued accordingly. I put together a valuation for Intel, and I had to use my imagination quite a bit. I valued the company based on the cash flows that I could put together for the company, as well as their earnings per share. Starting with the cash flow, the company will return to free cash flow days. But immediately, year one, they are burning cash to build those foundries. So no positive cash flow in year one. Year two, I think they're going to begin to produce some free cash flow. That would be roughly at the end of 25, beginning of 26. And then in 26, 27, they should produce free cash flow and start growing it from that point. If I use that kind of forecast with a discount rate of 10%, the cash flows are worth about $144 billion. Now, the cash on the balance sheet is $29 billion, and they have debt about $53 billion. So the equity value of the net present value of cash flows plus cash minus debt is $120 billion. The market cap is way down at $82.7 billion. So there's about a 45% discount on the net present value of free cash flows and so forth. Now, earnings per share is pretty solid at $1.10, using a P of 18, and they are going to grow that quite quickly. It gives me a stock value of $25.74. The current stock price is $19.36, so there's about a 33% discount on the stock right now using the earnings per share valuation. Together, they have a blended discount of 41%. And that's a decent discount, but the stock's just gone down so much that it really is a somewhat of a patience game for investors to wait for Intel to execute their strategy. I think for the next 6 to 8 months, it's going to be a waiting game. How desirable is Intel? At one time, this was the most powerful semiconductor company on earth. They had the uh, PC market very well cornered, and personal computing was really dominated by Intel. But computing really changed, and smartphones came out. The data centers become really, really important. So Intel has found themselves leaving the green, which is the most desirable space for a company in my quadrants, and they are in the gray. And really, how they execute on these foundries, they're either going to come back into the green to some extent because they have that foundry advantage. They can produce their own semiconductors and also produce semiconductors for other companies. Or if they lack the execution, they're probably going to start dipping in the red, because a company of this type, if they start just burning a lot of resources, what are they going to be worth? If they start burning a lot of cash, or they continue to burn a lot of cash, they're just not going to be very desirable. So for now, I'm going to put Intel in the gray, but really be aware that there are risks with the company, but there's also rewards. If the company does execute on this foundry business, Intel is going to be worth far more, north of 200 billion, if not more. If you consider TSM is worth upwards of $500-600 billion, Intel would be worth somewhere closer to that number if they can have successful foundries here in the US. Now, I've invested in Intel, and the result has not been positive. I've invested a little over $18,000 in Intel, and my stock is worth a little less than $11,000. I have an unrealized loss of 40% on this stock, and it's unfortunate. Now, I thought when I bought the stock that they were going to have some rough periods with this build out of foundries, but I hoped that they would get to some positive milestones that would really pump up the stock to some extent. And I didn't expect cash flows were going to be as bad as they have been, frankly. So it's been a learning exercise, and I've paid $7,000 for that lesson. And for now, I'm going to hold my shares of Intel. I'd like to give them a quarter or two to see if they can make progress on their whole plan and see if they can get back to where they used to be. Back to the analogy I started with, this is a storied franchise, a sports team, sort of speak, that did win a lot of championships a long time ago. If they can get back to what made them great, which was the personal computing market, making just great semiconductors and running these foundries successfully, they can be a very valuable company. Let's see what happens. Hey, thanks for watching the video. Just a quick reminder, I'm just an investor sharing my experience with you. I'm not providing any financial advice. Please don't use this video in any way to make your investing decisions. Please weigh your decisions carefully. And do me a favor and like my video and subscribe to my channel. That'd be great. Thanks again for watching. Good luck investing.